a lot of people in sort of pop culture thinking that this could be the end.
Yeah, so well, the dip that you're talking about is actually nothing new for Bitcoin. As far as percentage terms go, if we look at it historically, we've seen these types of pullbacks before.
Okay, wow. What an intro, an exciting start to our second live stream with CEO and founder Mati Greenspan from Quantum Economics, the CFO from Quantum Expeditions, and one of the big brains behind Cora Finance as well. I see we got Hernan there and Brad as well. Thank you for making time to join us on the Quantum Insights live stream. Let's go around and do a little mic check. We'll start with you, Mati Greenspan.
Good afternoon. How's it going?
Doing well here. Early Tuesday morning on the West Coast in the U.S. Doing well. Brad, how are you, sir?
Hey, pretty good. It is exactly midday here in Austin, Texas.
Right on. Yeah, the Lone Star State, and we got Hernan.
Hello.
How are you,
Hello. Sir? All pretty chill from Netanya. Looks like the markets are recovering, but it's getting close to decision time for Bitcoin and the rest of the crypto market.
Yes.
So I'm keeping an eye on that. And I'd love to bring my insights today. So, yeah, thanks for having me.
Looking forward to it. Yeah, thank you for being here. Thank you for being a part of the conversation and the community. So, yeah, the markets are they're moving. We're seeing some green. Mr. Greenspan, you're the advisor. You're the analyst. Just how about as we kind of welcome folks into the room and into the live stream, just give us an assessment of the markets and what you're looking at on your charts. And is there anything right now that's jumping out to you that folks, investors, retail institutions are taking notice of?
Yeah, it looks like the momentum from yesterday is still, well, it's still kind of momentum-y, but maybe a bit of resistance happening at the moment. Here's the thing that I think is kind of causing the friction. So if we look at this big chart of Bitcoin here with each candlestick being 1 day, you will notice a downward sloping resistance line. And we are at that line of resistance right now. So I feel like, you know, we've come up a bit from the lows, and this is the time of testing the resistance. Made a great trade on Dogecoin myself earlier today, got out with some profits. But I think that, yeah, the overall overarching trend over here is the Bitcoin dominance that can be seen from a mile away, you know, since the start of 2023. So, yeah, this is the trend, my friend.
Hey, could you? I'm going to just call an audible here really quick, if you could, since we're real time on a live stream. Could you pull up a chart of Solana? Obviously, now there's a lot of activity going on here. More and more people are coming in and filing ETFs for Solana. We just had BlackRock put Buildle on Solana as well. So they're putting there's a lot of activity going on, man, this morning. And so we're seeing a lot of price action. Just curious to get your assessment, what kind of patterns you might see, what kind of, technical analysis you might be able to offer from looking at these Solana charts.
Oh, absolutely. So here's the long-term chart for Solana when it was back at like, $2-3, 2020, 2021 explosion. We all know what happened here. His name was SBF, or some called him Sam Bankman-Fried, bit of a shyster. But since 2020, beginning of 2023, I would say beginning of 2024, even been on kind of this upward trend. This region, I think, is very important for Solana. We'll zoom in over here because what's happening over here is actually people building on chain and a lot of adoption. And over here, I think, throughout this peak, we saw a lot of hype. We saw a lot of AI projects that were built on Solana. And I thought it was very clever how, the network, unlike when Ethereum had all that hype behind it, you'll probably recall transaction fees went up to $400 and it took a while. Whereas, Solana was able to handle a lot more volumes than Ethereum ever did. But of course, when the pullback came, and the pullback did come strong, people were throwing out meme coins like they were garbage. Well, I wonder why. So that did have a heavy impact on Solana, but certainly as these last few days have been strong momentum upwards, and we're hitting that resistance line, I think that kind of holds true. But a bit of a breakout on this chart, but the real important one is Bitcoin, because as we know, Bitcoin is the leader, and then all the altcoins tend to follow. So quite significantly under the 200-day moving average at the moment, which is sitting around $183 per coin. Quite a discount, if you ask me. And you did. So.
I did. Yes, we did. I see we got Doug Hardwick, CEO from Quantum Expeditions, on with us as well on the live stream. And let's say good morning, good afternoon to you.
Hey, good afternoon. 8 minutes afternoon in Dallas. So we're afternoon.
It's afternoon.
I was eating my my Satoshio cereals this morning, and
yeah.
that was pretty good. But I will say, and Marty, maybe you can answer this. In my personal opinion, I think we're going to see a disassociation of altcoins to Bitcoin. And I think eventually there's, while Bitcoin takes its ride, I think altcoins are still going to be in their own little equilibrium, if you will. What do you think?
Yeah, I agree. And I mentioned the Bitcoin dominance chart, which we had a look at over here. I'll put it back up. But I keep this on my screen these days, not in the candlestick format. I like the line format, and I like how TradingView, Matt, if you could put my chart up on the screen. I like how TradingView does the line. It just looks very pretty. But the
hold on. Can you?
Sure.
Where did it go? I think can you share it one more time for me, please?
Yeah, sure, no problem.
Let's see here.
Yeah, it seems like the altcoins have followed, to some extent, what Bitcoin does.
There we go.
But and we used to see that, and the reason I bring it up is we used to see that with oil and natural gas, but natural gas just has been the volume, the production volumes have increased so big that they've got their own market, if you will.
Right. So what we're looking at here is the Bitcoin dominance chart, and the Bitcoin dominance chart shows the percentage of the market or market capitalization of Bitcoin versus the rest of the crypto market. So basically the way you get to this formula is you add up all of the market caps of all of the cryptocurrencies out there, and then you pit that against Bitcoin's market cap. So right now, Bitcoin's market cap makes up 61.64% of the total market cap of the entire crypto market. Now, obviously, in the beginning, it was 100% because Bitcoin was the only cryptocurrency out there. But then 2017, when the ICO boom happened, there became all these kind of cryptos. It became very easy to make a crypto, and it crashed. It crashed all the way down to about 35% at the low. And then 2018 bear market, a lot of those aforementioned ICO crypto coins died off, and Bitcoin reclaimed its market share. But what we're seeing lately is this very, very steady trend upwardly, which has been in place since the beginning of 2023, where the entire market is consolidating towards Bitcoin, even though there are still a lot of shit coins out there. Bitcoin is still gaining in market share, not dramatically, but very steadily.
Brad, let's get your thoughts on the market and Bitcoin and some of this that's going on. Let's bring you into the conversation, man.
Well, I probably don't follow the day to day as closely as Mati and some of the other speakers. I mean, my big view is generally shaped on, I guess, an assumption that we're still, until proven otherwise, on a 4-year Bitcoin price cycle, and under that pattern, we would expect to see kind of a local high around this time of the year, and then we'd go into kind of doldrums over the next several summer months, and then late in the year we would begin an ascent towards a new all-time high. And my personal prediction, yes, this is not investing advice, but merely my prediction, is that given that the last market cycle high was 69,000, that the cycle high for this 4-year cycle will be 420,000. So I've said that a couple people. I think it's the first time I've publicly said that on any sort of live stream. So if there's anybody watching, like, I'm on the record.
There's only 689 people watching right now that I have a tally on. So
We're live on 4 platforms right now. So we're actually live on YouTube, LinkedIn, Twitter, and Facebook. Instagram and TikTok are still missing. We're gonna have to get those in at some point in the future.
what? That's weird. Should be
Not,
on.
not blaming you, sir. I just don't see them on the pages, and we'll do some more tests and we'll get there.
Interesting.
I mean, with the Bitcoin dominance, I agree with Mati. That's like a important metric to watch. Here, whatever, 60% plus, I guess. And I think Bitcoin has really, kind of been at the top of the narrative, especially with the Trump administration. I mean, they've been a little more big pan crypto than probably a lot of Bitcoiners would like. But obviously, there was all the dialogue about the crypto strategic reserve. And then it turned out that was just not really the case. They announced something, but it's like not nearly to the point that, there's a specific Bitcoin strategic reserve. And then there's this like crypto thing that maybe they'll do, but maybe they won't. And I mean, I guess, back to Solana, Ethereum, it doesn't seem like there's been a kind of an electric theme that's ignited any of those cryptocurrencies. There's not like a super compelling new, I would call it the hot ball of money that's really ignited any of those ecosystems lately. So it's it's just like there's nothing to get people excited right now. It doesn't seem like.
Yeah. Let's see. Sultan joining the conversation. Hernan's in the room with us as well.
Yeah.
Hernan, let's get you to weigh in here on these markets. There you go. Well, let's get your comments first, Hernan, and then we'll say hello to Oz after you give us your first.
Yes, sir, guys. Can you hear me? Can you hear me? Okay.
Yeah.
Loud and clear,
right,
sir.
So,
Loud and clear.
Awesome. So in terms of Bitcoin, I see that it is trying to recover. Now you have to remember that still on a monthly time frame, we are still bullish as long as we respect the last bull cycle's high. Now this was a break of structure on the weekly, right? This drop, and we all felt it, right? This drop from 94,000, and this kind of a Trump.
Are you able to see his screen, Matt?
If he shares it.
Are you sharing your screen? Because you're referring.
It says share my screen. Wait, what do I need to do? You're not seeing my screen. Oh,
no.
Shoot. Let me try to share it again, and then you tell me if you can.
There we go. Now I see it. Now I can get it.
Can you guys see it?
There it is. Yep. Now we got it.
Awesome. All right. So let me clean up the chart for a bit. So what we can see is that on the weekly time frame, we're still very much bullish, respecting as long as we respect this, right? And even if we break it for like a few days and we drop into the low 70s, this is still a very bullish chart. But unfortunately, this is not the story about the crypto market, right? The crypto market looks terrible, and you can look at Ethereum, which hasn't done a new all-time high. And even if we go to more the specifics, the charts versus Bitcoin look even worse. This has been a
Oh.
disaster. Like you see this yellow line. I'm gonna draw it red so you can see the blood. This means blood. As when this broke down, right around July last year, this meant that, hey, this is not the almighty Ethereum that we used to know. This was the only layer one that had survived 2 cycles prior. Generally, most charts against Bitcoin look something like this. You know, they make a super high, people get super excited, da-da-da, everybody's buying, crazy chart, and then it just kind of dies off into the nowhere. Now, one exception of that, and you mentioned that, Matt, is Solana. Now, Solana has been a very, very, very exemplary example, not only because it has made 2 of these, right, and it has remained a leader in the space, but because it also kind of achieved this escape velocity, in which we see that developers are building, things are getting done, innovation is happening there. So we need to separate between Bitcoin, which is kind of our ultimate apex asset, and Bitcoin defines the market. Until the Bitcoin dominance, as Maddie mentioned, until we see a train shift, you see this trend?
Close like $100 million in Bitcoin was converted.
So this breakdown here, do you guys see this?
Yeah, I see it right. Yeah.
This breakdown lasted for 2 months, and this was the whole AI agent kind of narrative for like 2 months. November, December, we all thought everything's going to the moon, and oops, we're back into the channel. As long as we're into this ascending channel, Bitcoin not only is the leader in the market, Bitcoin is the market. If Bitcoin is going up, you can try to trade, you can try to look for outliers and overperformers. And if Bitcoin is dumping, alcos are gonna dump worse, right? Bitcoin sneezes, the market catches a cold. Bitcoin farts, and the market gets chronic diarrhea. That's basically the crypto market right now. Now, when this market dominance, and I do believe that it's going to come eventually, when this breaks down, this is a risk on environment and a bet on innovation, right? There's Bitcoin, the store of value, the asset, and then there's the whole other crypto market, starting with Ethereum, Solana, XRP, the meme coins, AI, Render, Link, oracles. The whole market is based on blockchain innovation. So they're kind of 2 separate beasts, but without Bitcoin, the whole thing is just that's the basic. It is the market, and those are my 2 thoughts.
Yeah, that's some good analysis there, man. Yeah, go ahead.
I would add, we've had a 6.7% rally over the past 5 days, right? And we're looking at the pressure levels of probably 90,700 and 93,700, where we could have a breakout from this, very similar to what we did, in kind of like the last short bull cycle. I think that move is coming in the next few days. I think we've had some interesting announcements alongside that. I don't know if you saw it today, but Trump's Liberty Financial just announced a dollar-denominated stablecoin, which is going to start adding into the mix here. So, as we start moving towards what is shaping up to be kind of altcoin legislative spring, right? We've got, multiple bills that are moving to the floor right now inside of the House. At the same point in time, we've got, big moves in terms of your Bitcoin reserves for a couple of states. I think we're going to see some more market stabilization, but I also think that the ETFs and the ETF dumps that we've seen in the past couple of weeks, plus a couple of your ETFs like BlackRock just scooping up everything they can, are going to add mixed market signals, at least for the short term, about the next 2 weeks.
Yeah, Trump also announced with Liberty Financial that they're going to do a partnership with Crypto.com,
Mm-hmm.
and you can see the effect. Like this is the announcement, right? It's like a 30% bump on the price on
Yeah.
CRO, the Crypto.com's token.
Yeah.
What's up, Jerry?
Hola. So,
Good to see you, man.
good
Happy
morning.
today.
Happy today. So clearly there is some suppression in the price. I don't know if it's natural, if it's unnatural. I've had theories on both. But if you look at what I just chatted before I joined the stream, Bitcoin just hit a new all-time hash rate yesterday, right? 1.088 Zeta hash. Again, everyone in this group has been in the mining space for some time, so we're all familiar of how powerful a number that is, right? I think it's like 1 quintillion calculation a second or something like that. So the network is very, very healthy. All the metrics say this. We're about to see Bitcoin go from 80,000 to 500, 800, $1 million very quickly. I don't know if it's going to happen next week, next month, but it's coming because you cannot stop what's happening, right? Overall, we can see just from, I think Hernan was just showing a chart, the volume. If you look at the volume spikes at the bottom of that chart alone, Bitcoin should be at about 300K. No doubt about it. So we are about to see Bitcoin pull a God candle. We're going to see $100,000 candle in the next 3 to 6 months. This is going to happen. There's money coming into Bitcoin right now. A couple weeks ago, the ETF outflows were very high, but at the same time, we had literally BlackRock buying hand over fist. We had Fidelity buying hand over fist. We had Kathy Wood buying hand over fist. We had Strategy buying hand over fist. So the fact the other day that I think it was yesterday, Strategy bought I think like almost $500 million worth of Bitcoin. We saw the price go up like 5-7%. So it's only a matter of time before we see Bitcoin pull these God candles because there's just too much money being absorbed into Bitcoin itself. I think the main problem to why Bitcoin isn't moving is because we're having a liquidity crisis across the board. And over the last 2 quarters, you can see the Philly fund rate has dropped, right? It went from 5.55% to 4.55%. And if you look at the M2 supply over the last quarter, it has jumped. So we're starting to see the liquidity change in the markets, and we're going to see that reflected first in Bitcoin because it is the canary in the coal mine. It will react before all the other markets react. And when it reacts to this liquidity solution or the burr printing that's about to occur and has been occurring, I think we're going to see Bitcoin jump hard.
Yeah, to support that, right? First of all, like we can look at it on. I don't know if you guys are seeing my chart.
Yeah, share it again with us, please.
Yeah, I have shared. I'm seeing in the side screen. Maybe I'll just stop sharing and share again. Will that work? Okay, let's do that.
There it is.
So there's a very interesting indicator. Now of course, the short term, this can obviously go retest this and still give us a few months and another pullback call to here. So I'm not saying that this is going to happen tomorrow. So on a technical level, we cannot be sure that that's it. We're going up from here. That's not what I'm saying. What I do want to say is that the market has kind of panicked. So the market is kind of scare mode. Bitcoin is still sitting at 88,000, but what I want to point you guys is to this indicator right here, which is the stochastic RSI. The RSI here indicates that it's crossing the 4, which means basically that on an impulse basis, this is quite oversold. So meaning that this points towards seller exhaustion. So basically, I would definitely see Bitcoin charging up from here, And I don't know where this point's going to be, but we either make a decision here at the 94 level to retest the lows, or it's going to be, I will not bet on a V-shaped recovery, like we just go up and that's it, until I see the very important factor which Matty mentioned on our last call, which is liquidity, meaning the money printer going burr. Until I see loosening conditions on the market, I do not expect a V-shaped recovery. I would bet more on like April, May. We see some kind of retest of this higher breaker, and then we go into a dull period again for June, July, and then we do the mega parabola. That would be my, I'm not predicting markets, but that would be kind of my technical thinking of where we are.
October, right?
Yes, sir.
Nice. All right, cool. We have the join link in the QE fam group for anybody who wants to join us on the stage and is a quantum economics member. You are welcome to come on in. There's a link there. And then obviously, whichever platform you're seeing us on, just let us know in the comments and we'd be happy to hear from you if you've got any questions or anything to add to the conversation. This is a live stream. Anything goes, any topic. We're building and building strong. So,
yeah, we're up to over 2,700 folks right now on the live stream on the various platforms. So thank you for being here. And again, if you got a comment, you can fire it in and you can ask the advisor, you can ask the panel, and we'd be happy to answer that. But again, as we continue to move through the markets here on a live stream, Marty Greenspan.
Absolutely. Happy to share my screen as well. Yep. And kind of take a look at that hash chart that Gerald was talking about here. This is the hash rate of Bitcoin, which is the cumulative power of compute that is contributing to securing the Bitcoin blockchain. This is the all-time chart, of course, since Bitcoin's inception. And as you can see, this chart only goes one way, except for very short periods of time when it actually goes down. And that's because technology progresses and the network progresses. So not only is Bitcoin getting stronger as far as more people adopting it, it's also getting stronger as far as the computing power because there are literally people who design computers called ASICs that contribute to the Bitcoin computing power. So what Gerald was talking about is the all-time high, and measuring a hash rate is very difficult to do, and you can only ever really get a kind of snapshot of a single millisecond. So it's very volatile in its fluctuation. So that's why you'll see that when we switch from the 6-month chart to the 3-month chart, the points don't exactly line up. So take a look at this point over here, right, which is the second highest point on the chart, and see what happens to it when we do that. It doesn't exactly line up to where it was before. But that all-time high is definitely very apparent, which is the highest second. So we've got 1,000 exahashes. What's 1,000 exahashes? Is that a not
theta hash?
Theta hash. There we go. So 1 theta hash, new all-time high.
Theta.
Theta?
Z-E-T-A.
Zeta with a Z?
Correct.
Zeta hash. So there's a 1 zeta hash, which is the all-time high for Bitcoin hash rate.
And during these periods, we have a pullback in the hash rate, and we have not seen a major pullback. So that's why I'm still very bullish.
Yeah. Well, the one thing that I would push back on your analysis is that the other metrics of Bitcoin do not seem quite as bullish as this one. So here we can see the number of Bitcoin sent per day. So this is the overall on-chain volume of Bitcoin. which is at a low. It's $14 billion per day, which is, I mean, it's still a lot of money, but it's not, what it's been higher than that, let's just say. Actually, it hasn't been this low since here on the chart, which is October 2024, about 5 months ago. Last time it was this low. And then the other thing that I would say, that the number of unique addresses in Bitcoin also not extremely, high as you might think. Bitcoin's hash rate does continue to gain in computes per second. However, I wouldn't say that we're seeing some sort of groundbreaking usage of the Bitcoin network. And let's take a look at the mempool as well, which is pretty telling. If we're already giving a kind of thorough overview of the Bitcoin network and how much it's being used or how healthy it is at the moment, we got to include the mempool. I would say January 20th, Inauguration Day, was a very busy day for Bitcoin. Whereas, we definitely have seen a kind of cooling off, and the mempool does look pretty clear at the moment. Transaction fees are not, I would say, not median transaction value, median transaction fee over here, not incredible. So yes, even though the hash rate has reached a new all-time high temporarily, it has come back in. It always goes up over time, as we know. And of course, Bitcoin's dominance, is very clearly on an upward trajectory. We're not seeing like an over usage of the network in any way, shape, or form.
What about, have you checked Lightning?
I don't. Is Lightning a real thing? I don't think it actually.
Yeah, it's a very real thing. I know you don't like it,
Shots
Scotty,
fired.
but it is a very real thing. It has grown like 20x in the last couple of years. So,
do you have any charts that can support that?
I don't have
like
Lightning charts pulled up at the moment. But,
Yeah, the Lightning Network is really going to start increasing transaction velocity, and it's interesting because where Bitcoin was used as a cross-border currency between Venezuela and some of its trading partners in the past 5-6 years, I think we're kind of at this juncture after the Trump White House crypto conclave that there just isn't enough Bitcoin to settle cross-border transactions on a regular basis. There's just not enough that's held by these countries. So I think what you're going to be seeing with and Lightning, I think, plays into this, is a change from what we saw with the traditional OTC into more purchases with Lightning over the course of the next year or year and a half. But if the banks choose to integrate Lightning with the XRP framework for cross-border transactions, we could see a lot more velocity in this chart.
Good morning, John Farjo from Lunar Crush. What's up, man?
Hey, Marty. Good to see you. How are you doing today?
I'm having a blast, man. Thanks for asking.
I like your charts you were just showing. Looks like Bitcoin's nice and healthy.
Yeah.
So a good question about the hash rate, and I guess the Bitcoin mining as well, is the hash rate kind of responsible for what we will see in a very long term, once all the Bitcoin is mined, that the miners would instead kind of become sustainable only through transaction fees? And is that kind of the theory that supports the rise in hash rate? And the other question I would ask here the panel is, so what happens if the key case for Bitcoin, which we've seen so far, is that more of a cross-border transaction layer and a currency per se, it becomes this sacred store of value what most countries just purchase, store in their vaults, and hey, that's a $250 market of its own, and it's a $1 million Bitcoin for sure. But I don't see that if countries are buying it just to keep it and store it as a reserve asset, that would increase the transaction volume a lot. So what are you guys' thoughts on that?
I'm happy to jump in on the first question. I might need you to repeat the second question when I'm done. But yeah, so let me share my chart with you regarding the Bitcoin halving. As we know, Bitcoin's halving happens once every 4 years, approximately. The last one was April 20th, 2024, so about a year ago. And the next one is in about 3 years from now, or 1,115 days, 6 hours, 48 minutes, and 47 seconds exactly. Right now, so a Bitcoin block happens approximately every 10 minutes. That's when the miners take all of the transactions from the mempool, which we looked at over here. These transactions are not confirmed yet, so they were broadcast to the network. Somebody said, hey, I want to send some Bitcoin, but they haven't been stored into the blockchain permanently yet. So what miners do is they take transactions out of the mempool, they arrange them into a block, and then they solve the cryptography of that block by producing the hash. And the first one who solves that block gets the block reward. They broadcast the solution to the block. They broadcast the entire block with the hash key to the entire network. And then once 51% of the network agrees that the solution is correct, then it becomes permanent and the block cannot be altered. So the one who finds the block, the one who solves the block, gets a reward of 3.125 fresh Bitcoin, which at today's what's today, $86,000 per coin. So it's $86,000 times 3.125. The block reward every 10 minutes is about $268,000. And here's what we can see over time. What's happening, right? Is the inflation rate of Bitcoin continues to go down. In the last halving, the inflation rate went down from about $60,000 per day to actually no. In today's terms, it's about $40,000 to $20,000. 20 million. Sorry, I said thousand. $40 million down to $20 million. So in half exactly. But there's still only $20 million per day being produced by the blockchain itself. Whereas what we just saw, the on-chain volumes, if you'll recall, are somewhere in the neighborhood of $14 billion. So sent every single day. So really, at this point, the inflation caused by block rewards is negligible. I mean, it almost doesn't even register. What's $20 million, when compared with $14 billion of on-chain transactions? And that's not even thinking about the ETF volumes and the volumes that are happening across exchanges and yada, yada, yada. So what you're asking here is when the block reward runs out, what will sustain the miners? And the answer is that the transaction fees are supposed to sustain the miners. However, that doesn't happen for another 100 years or so. The last Bitcoin block reward is scheduled to happen around 2140. So 115 years from now. So until then, we still have that block reward, which is subsidizing the mining. After that, I suppose we'll have to get on another live stream, when we're all, 160 years old, collecting our Social Security checks.
Yeah.
I'm excited that John's here with us again from Lunar Crush, and John has a lot of data at his fingertips. And I want to be able to bring you into this conversation, John. It's awesome that you take your time to share with us and to come through. What are some of the big metrics in the past week in the narrative that you're seeing develop right there at Lunar Crush with the data that you see right now? What is kind of jumping out to you?
Man, there's a lot of things, but I do want to talk a little bit about that last topic though, which what I'm really curious about is, this whole world of Bitcoin started as it's going to be used for payments, cross-border, no delay, no middlemen, we all know the same speech, right?
Yeah.
It doesn't work at scale. If the whole world used it, there wouldn't be enough block space. And I think like as we progress and it becomes, whether it's the ultimate store of value and likely both in some manner a payments network or a data network, may have nothing to do with money. We're going to run out of block space.
I'm sorry, John. If you're not speaking, can you just mute? Because I'm getting some background noise coming through on that. So sorry. Go ahead, John.
Can you hear me?
Yeah, you're good.
Okay. So you just inevitably run out of space. And we track all sorts of things, but I mean, there's a huge narrative around layer 2s on top of Bitcoin. Lightning's huge, stacks, things like that. There's a lot of liquid. There's all these things out there. They're going to have to take a prominent role. It's like an absolute in some manner, because if we're going to use Bitcoin, the fees to transact are going to be too high. There's not going to be enough block space. In some sense, we're heading towards a place where, if you're a company and you must, or a country and you must transact on chain, you better get into mining awfully quick. You better start reserving your own mining real quick. So I just think it's interesting. And when I say these layer 2 things, I mean, this is actually something we're seeing. We see a lot of narrative around layer 2s. We see a lot of activity going on right now, and it just keeps progressing, which means there's more and more mind share towards building on Bitcoin. So that's something we're seeing. So I just wanted to state that. I'm going to come out with a big major point that we saw yesterday, and we posted it. I think Mati even liked it. Bitcoin has more social activity than the entire stock market. Wow. Think about that for a second. Not crypto, Bitcoin alone.
Say that again. Holy crap. Say that again, John.
Bitcoin has more social mentions than the entire stock market of the United States.
Say it again. Say it again. Slower.
For the shorts.
So Bitcoin has, I think it was by about 50,000 yesterday. I can't remember, but
wow,
it has more social activity, more people talking about it. And I'd say, one of the things that we look at is we look at stocks also. And so when we look at where it says categories, or I could share if you want. But like when you look at categories and you look at stocks, let me share. Let me see if I can get this working here.
Easier than you share than tell me how to what to click on, honestly.
Sure, how's that? Can you see my screen?
Yep, we'll share it.
So one of the things that when we track combined social and market activity, that's fascinating. DJT is number 1 right now. When we look at like yesterday, when we were looking at the number of mentions, for example, we see like, I think we saw that like 8 out of the top 10 were Bitcoin related. Whether it's Tesla that holds Bitcoin and it has obviously a lot of social activity well beyond just Bitcoin, obviously, but there's a lot there. There's a narrative around should GameStop buy Bitcoin. We see strategy here. I mean,
I got a very cool tweet about MicroStrategy there, and I think that's also raises some concerns. I'd like to talk with you about.
But even behind MicroStrategy, we're seeing Mara come up. Mara is I think they're the second most Bitcoin being held in their treasury and by a public company. And you're seeing like strategy itself has more social mentions than Google or Meta or AMD, Microsoft. Right. You start to see this thing that's going on here. We've got Coinbase here, Bitcoin crypto related, Robinhood, Bitcoin crypto related. I could keep going. It's going to keep updating. I'm sure I'm going to run it. Oh, there's Mara. Oh, it keeps updating. There's Mara. Right. I'm going to keep going. We get DJT, which said that they're going to launch some funds yesterday. Right. I'm only at the top 44 here. So my point is that, I'm going to stop sharing this, but like my point is we're starting to see Bitcoin infiltrate the stock market in such a way, and it's overtaking the other companies. So I think I just want to state that we're seeing the mind share of investors kind of wrapped around Bitcoin and looking at the companies and talking about the companies that hold it. And so I think that's a really fascinating thing. And I think that really bodes very well for the future for a company that's considering adding Bitcoin to their treasury. And I think, it's sort of like, I know strategy talks a lot about Bitcoin per share. I think that's genuinely a real metric that's going to keep going and going and going. And it's like, I don't know where this all ends, because at some point it becomes extremely hard for these companies to buy Bitcoin. I mean, strategy is the coyote out there that's going to take every advantage that they can to add more.
And they're holding now, no, so they're holding 2.41% of the Bitcoin supply. That's the tweet I shared with you guys. But if you take a look at the active supply, which is a supply that's actually being, known to be transferred in any time, that's closer to 4% of the active supply. Now, there's this chart of the acceleration of strategy and their Bitcoin that Miles Deutsche published today. And he's asking, like, isn't this a bit scary, right? And my reply to this is that, listen, this is not scaring me, but it is changing the nature of at least the distribution and the nature of Bitcoin, because it may be part of the natural evolution of the asset once institutions and companies and corporates and country and nation states are getting into Bitcoin, accumulating. But you have to understand that the nature of Bitcoin as being this decentralized currency amongst all people in the world, it is going to change as the difference in wealth accumulated in the world is also distributed unequally. So what do you guys think of this? The goal for MicroStrategy is to own over 7,000 Bitcoin, and they already own about 4% of the active supply. Does this concern you? And do you guys think that this changes the nature, or at least what Satoshi envisioned for Bitcoin?
Yeah.
Hey, real quick, this is where I think the mindset of Bitcoin shifts away from Bitcoins to Satoshis. And I think we're going to talk more about in the near future how many Satoshis you have compared to how many Bitcoin you have. Because
but is the fact
in the
that
future, you're going to say, I've got $1 trillion, or do I have a Bitcoin?
But still, if MicroStrategy owns 4% of all the Satoshis in the world, that's still a very, very hardcore distribution. Don't you think?
But Herman, think about it this way, right? So when Bitcoin hits 150K, and we're talking realistically, potentially end of year, beginning of next year, you are starting to think about this in the context of what consumers can actually access. And I think that's where the Satoshi conversation becomes really germane, not just for that consumer access of it, but, banks will also start talking about this as custody starts to become a thing. And you're seeing this with Boney Mellon right now in New York. They are a Fireblocks customer. They've got corporate custody. You're seeing this with Caitlin Long's Concordia Bank, which is custody for institutional customers. But I do think that Doug has a serious point here that people are going to look for a denomination, and that is the only denomination that we really have with Bitcoin, and that will probably become kind of the conversation point within a year.
Right.
So somebody posted this. It's funny that you're posing this question today, and I was just talking with @Jason on Twitter, who was asking me about like the total supply, the lost amount, and how much Satoshi owns. And well, first of all, the lost amount of Bitcoin is you'll never really know. It's only estimated, and that's somewhere between 3.5 to 5 million coins that are completely lost. Satoshi coins is probably a bit clearer, where we understand that there's approximately 1.1 million coins currently believed to belong to Satoshi Nakamoto that have never been moved and likely will never move. And somebody put a very interesting reply that said, well, Saylor's a bigger threat than Satoshi is at this point, where Michael Saylor owns 506,000 coins, which is almost exactly half of what Satoshi owns. So 2.4%.
But that is an active supply, Matthew. That's not a passive supply like Satoshi's. That is probably never going to move.
You say that, but the way that I think about MicroStrategy is leveraged Bitcoin. And if there's one thing that I know about the word leverage, it does open the possibility for liquidations. And what that means, while the market's going up, it's not such a big deal. But say we're in a position where the market is going down over a sustained period of time, say a year or two, and Michael Saylor's not able to gather in new money in order to service his debt, he will at some point in the future, I believe, obviously none of this is tested, but logic would dictate that at some point in the future, he will have to sell some of those coins in order to sustain the debt payments that he is incurring. So is it a problem right now? Probably not. But as he accumulates more on a leveraged bet, I would say that yes, it will become a very, very big problem in the future.
Maddie, what do you think about decentralized finance in respect to that, right? Because we've had these conversations for a couple of years. One of the big things that could be done, given that he has as much Bitcoin as he does, is they could issue a subrogate asset. So they could either work with a bank, they could work with Goldman, they could work with some financial institution out there, and they could say, hey, we're going to take $1 billion worth of Bitcoin. We are going to issue debt on that Bitcoin. We are then going to use that debt to pay off debt in another currency. I mean, this is the kind of complex mechanics of finance that most of the world operates on. This could be something that we start seeing inside of the industry within, the next year.
Strategy B is going to become a bank. That's the end goal. Like, they're going to have that much corn. You have to become lend and become a bank. And it brings everything back to L2s, right? Like, if there isn't enough, Satoshis, there, roughly, there's 2.1 quadrillion Satoshis. Well, this is where Litecoin becomes very important, right? Because you add their two supplies up, that becomes 8.4 plus 2.1, that's 10.5 quadrillion divisible units. And again, if you see the amount of money that just got transferred out from Bitcoin to Litecoin in the last 3 days, yeah, you should be buying Litecoin as well. I want to say it's getting close to of Bitcoin transferred to Litecoin. Did you hear what I just said?
No, you kind of cut out there a little bit, Jared. I don't know if it's your connection or if it's
is
me.
Is that Litecoin or the Lightning Network? Because let's be sure we got you straight.
Okay, so if we're talking about Gerald's talking about Litecoin.
Litecoin. Yeah, he's saying Litecoin.
Talking about the network too. The alpha I'm trying to share is my new theory is the cryptos that are compatible with the Litecoin network will become the cryptos forever.
But why Litecoin, Jerry? Why not?
Why Litecoin? Because it's a proof of work. It works. And if you look at the metrics, guess what the number one crypto used for payments for the last 2 years running is? Litecoin.
I know. I bet John's probably got some data over there that he could probably pull up there from Lunar Crush and be like, I can probably tell you the most used payment.
I think, man, look, I'm an early Litecoin investor. I've traded it, this, that. I remember when Charlie Lee sold the top. I remember the whole deal here. It's interesting when you see something that like I would call in a strange way, take no offense, Litecoin's boring, but in a good way.
But in a very,
this isn't supposed to be mesmerizing and super exciting and whiz bang. Every other day there's a new blockchain. And to see something that stood the test of time like Litecoin has is really interesting. What's also interesting about it is that it gets kind of a lot of flack on social. There are people that go, what is that? Come on. it's
hate
not
it.
Sui, it's not Solana. There's not even memes built on it. Like there's all this like narrative around like this kind of startup Web 2 mentality that's kind of transferred into Web 3 versus saying, well, how secure is it? How long has it been up? What's the uptime? Like, is it like a store of value, or is it just the next whiz bang blockchain that a VC funded? So I think it's a really interesting narrative that I think actually at least current crypto investors have a hard time with.
Well, I think part of that is because the same way that XRP is being driven as the cross-border currency, Litecoin has been your consumer currency for a long period of time. If you look at all of your Litecoin evangelists on Twitter, a lot of what they were driving for, pre-COVID through COVID was you can go and you can check out with this. It's supported at a variety of merchants. There's online retailers that are taking this, right? So, you've got these interesting theses where we have Litecoin and other things kind of hitting that consumer aspect of it. You've got XRP hitting sort of the cross-border aspect of it. We've got, the Bitcoin holdings, which are really kind of like gold assets that either could be leveraged against, not leveraged against, create a bank, create a DeFi, do whatever you want with it. And then we're going to have the question of sovereign wealth funds popping up inside of all of this, because those are going to be taking on large tranches of Bitcoin inside of the foreseeable future. So you now end up with these interesting nexuses of really kind of market pressures from different sources that we didn't have a year ago, and they're going to be far more developed within the next 6 months, and start issuing their own market pressures as they either buy or sell inside of that ecosystem with the ETFs. But the front facing of this, consumer crypto, is kind of going to run its own bag, I think.
Brad, where you stand on all this, buddy? You've been kind of quiet here. Weigh in on the Litecoin, Bitcoin, on the whole conversation so far today, man.
Well, yeah, I mean, I think a lot of people, I think that it's true that Litecoin has a brand that is known since it's been around such a long time. And similar to XRP, people bought Litecoin because it was cheaper than Bitcoin. And what I mean by that is the price was lower. Like, Litecoin's price it's $93 versus Bitcoin is $93,000. It doesn't make sense. I mean, going back to kind of the earlier conversation about Satoshis, and yeah, you can buy like some of a Bitcoin, but that is like honestly how a lot of people think, and that's how a lot of people have bought Litecoin. On the other hand, and I agree. I think Litecoin. I guess it was John. I mean, Litecoin has not really been a very dynamic ecosystem. I mean, you don't hear people talking about Litecoin and like building on Litecoin. I mean, I even know people who are building on Dogecoin, but I don't know people who are building on Litecoin.
The Litecoin Foundation is. They
Okay.
They have been for a while.
But on the other hand, Litecoin has a well-known brand, and we talk about the attention economy, and how do you break through? I mean, like Crow token, there's like nothing all that interesting about Crow token, and here but they managed to kind of make this deal with Donald Trump, and their CEO had a meeting with Donald Trump, and he agreed to support Crow, and so they're announcing a deal with Trump now to promote these exchange traded products with crypto.com. And so, but yeah, it's just about the attention economy. And I think probably Litecoin is, I mean, most people have heard of Bitcoin. And I mean, in my personal journey, like a lot of people haven't even heard of Ethereum. But maybe a lot of people have heard of Litecoin.
Well, Litecoin, I think, has
to their defense in terms of Crow. So to their defense, Kronos, the coin of crypto.com, it's not just another like Litecoin or meme coin. They have built a full-blown EVM compatible ecosystem with their whole DeFi meme coins applications layer that is EVM compatible, and they support it within not only within their exchange, but they're also tapping into this decentralized part, just like Binance did with the BNB coin. So if you would take a look at the very few exchanges that have become into the mainstream, alongside Binance and Coinbase, I see Crypto.com is a very good contender for that mainstream adoption, especially with the commercials that we saw last time. And I do think they have their hat on the ring when it comes to mainstream adoption. And if you're betting on those ecosystems to thrive, then Crow, it's not just a pump and dump, but it's an actual, I do consider there's potential.
How much of it do you have, Hernan?
My bag is probably.
I always get a sense when people are talking.
Yeah, no. Guys, make sure that you can assume that every token I talk about, I'm talking my book. You should assume that about every single crypto person in our chat.
So here's the thing.
Well, just to sort of hit that, I'm just looking up their TVL on DeFi Llama. It's 366 million, versus Ethereum's 165 billion. And I mean, even Ethereum's like having a hard time getting traction, and Solana's at 26 billion. So I wouldn't say Crow is a big player in the DeFi scene.
What are you looking at? DeFi Llama? What data?
Yeah,
source?
DeFi Llama.
Okay. Yeah, because here's what Jerry was talking about with the Bitcoin Lightning channels. There are charts here that I don't have no idea.
I forgot to message you about that. I mean,
yeah, I don't know what they're saying. Can you walk us through some of this?
Yeah. So hold on, let me get my other device because I have.
I was not able, for the record, to find any such kind of charts for Kronos. So if they do have adoption, the only thing that comes up in Google are, the usual CoinGecko or CoinMarketCap pages where you can see top level stats about the coin and the exchange traded volumes, but how many nodes does it have? How much, actual adoption is there on the ground that is not linked with speculation? Because that pump right there, that is all about.
That is all about Trump announcement. But I would look more at Crow as more of an exchange
coin, by the way.
Hey, I have a small bag, so I'm happy to.
Yeah, Trump coin does seem to have bottomed out over here at $11 or $10 floor. So if you're looking for something that's connected with Trump, maybe that's more of a realistic play than it was at $70. Go ahead, Gerald.
How would you justify though a $12 billion fully diluted market cap where 80% of the supply is being held by Trump's?
No, I wouldn't bet. I'm not going to touch that dog shit. I'm just saying, like, if you're interested in betting on what Trump's going to do, then you might as well go to the source.
Yeah, find the bottom. If that's the bottom, I mean, yeah, maybe it is. But we've won on proof of work multiple times. Stay away from celebrity coins, even if it's the president of the United States. I can't believe I have to say that.
Yeah.
But yeah, if we look at the top left chart, the blue one there, that's very telling. We can see that the number of nodes, clearly at the far left, that's probably like 2017 is my guesstimate, or 2018, somewhere in there, because the Lightning Network was in its fledgling years. But we can see just in the last couple of years that those network nodes are, obviously it says with and without channels are around and that would I would assume is including all of the network nodes. But the thing that you want to look at that's most important, I think, is the third one with the orange line.
It does seem to be missing data, by the way, because it only goes till September 2024.
Yes, yeah, and it's not totally current and accurate, and I'm sure that this is again.
Actually, all these charts are only up till September. Jeez.
Yeah, I know. You would think, and being in crypto, it'd be a little bit closer to real time.
Yes.
But this is also Lightning Network activity, which is is trackable and traceable. And this is another reason for OpCat, right? If anybody in the room and or in the space listening who understands why the what is that BIP 420 should be implemented, then we could track. We could literally. Lightning Network would become Turing complete. But anyway, network capacity, it says that, as of a couple, I think Madi was saying September-ish, it's got like close to $300 or $400 million running through all the channels. So, I mean, it's definitely being utilized. And I tell people, compared to just a few years ago, the Aqua wallet is a very good L2 wallet. I highly recommend it. That is Samson, Mao, and team at Jan3. That is their product, and I use it. It's a great wallet. I highly recommend it. But getting back to what I was saying with the L2s, is that if you're not a proof of work and you don't have divisible units like Bitcoin, I don't think you're going to be like in long term in the future. And what does that mean? That means that sorry, my dog's biting me and I'm getting a little distracted.
Oh, good.
Nibbling on me, I should say. What does that mean? That means that anything that's compatible with a Lightning Network, so Litecoin, Bitcoin, Decred, I think these things are long-term plays. Everything else, I mean, again, if you haven't heard me talk about the EVM in the last couple of shows, I find problems with the EVM every other day, and these aren't small problems. The guy that last week, the guy lost $200,000 converting from USDC to USDT, and he got $5,000 back. It's like, come on, man, are you kidding me with this crap? But this is why proof of work is very important. The EVM is not immutable. This is why Litecoin's important. It's immutable, right? The internet went down tomorrow. Everything that's on an Amazon server, that's your bank accounts, it's everything that's on the EVM, gone. Everything that's on Bitcoin and Litecoin, and I'm pretty sure anything that's a proof of work that has a decent amount of nodes out there is going to be okay.
Can I just, I want to bring in a comment here. Somebody's watching on X, wanting to know, what about RWA and DPIN? Very interesting developments. I guess we'll start with John on this, since you probably have a lot of access to data. What are folks talking about RWA and DPIN? What are some of the more popular projects there, John, when it comes to RWA and DPIN that folks are looking at right now that you're seeing over there at Lunar Crush?
So, we actually just posted something over the weekend about it, but I mean, there's no stopping Chainlink, but we tend to see, Hedera, Avalanche, Ondo keeps coming up. I'm super impressed with Ondo, just in terms of what they're going after, what they're targeting, that conference they just had. Yeah. I think it's really another thing to point out. I mean, I know we're talking about utility and trying to justify valuation through utilities. We are not there. We are at the speculation phase of crypto, and you could look at Kronos, and you could look at CRO, and you could look at it, and it matches the chart of every other altcoin over the last 3 to 5 months. Some are worse than others. You could look at, you want to see some major risk, go look at like a GigaChad, and you start to see these things down like 90%. Virtual protocols, another one. Like you start seeing these things down from $5 to 50 cents. And all of a sudden, I remember I was sitting here with you guys last week and saying, hey, you know what? It's depressing out there. It's sad out there. Activity is low. However, it looks very bottomy. Things have stopped falling. And so we went from falling a week ago to, you look at CRO, it's the second best performing coin we look at right now today at this moment. Obviously, things change. But I mean, we're seeing community come back. We're seeing market volume come back. This hasn't happened in 4 months, 5 months at all. So like this is a big sea change, and it has nothing to do at all, literally 100% at all, with anything that they built, with any specific thing. It's a sector thing. Like it's literally risk on, and it's across the board. But I think to the point of RWA and DPIN, the fascinating thing is that even over the last several months, when we've seen a lot of things still falling, and these coins are no different, right? Like I'll pick on Injective, which has been like uber hot the last like week, month. But it's, over the last 3 months, it's down 54%. And Injective's done nothing but great announcements. A lot of and they're in the RWA space. But I think what we keep seeing is we keep seeing accelerating in general interest in both RWA and DePIN. I mean, we do a post about the tokenized sports sector, and we'll get 50 likes. We do something on RWA, we get 1,000 likes. So it's like literally the interest is just there, and the speculation is there. I think because the pie is so large. And I think it's really exciting, and I would really encourage everyone to keep their eye on all of these RWA assets, especially some of these kind of small to mid-sized ones that are talking a big game. Again, Ondo's talking a big game. Injective is talking a big game. Hedera is.
Axelar.
Axelar.
I'm going to put Axelar out there, man.
Like
I'm watching that one.
Blockchain, like real estate. I mean, like real estate is gonna fly right into this whole crypto sector, and it's gonna. There's some of these companies that are gonna focus on this, are gonna literally save billions of dollars in the real estate sector. So they have an actual use case, an actual need. There's an actual demand. So I think it's really. If I had to pick one sector to watch over the next year, it's probably RWA, more than everything, by a lot.
And we're seeing a lot of even the traditional Franklin Templeton and some of these bigger institutions are coming on board now. And I think, and I mean, I just get the rooms assessment here. I think that they realize that they were late to the party when it comes to digital assets. They missed the boat on Bitcoin. And so now on this new vertical, they don't want to be late. They want to be active. They want to be out there. They want to be engaged. And I think we're seeing that just in light of what we saw at the Ondo Summit in New York, and that these institutions are getting wise very fast.
Effectively, what Gary Gensler and Operation Choke Point 2.0 have done is, they've chased out the bad actors, or they chased out the good actors and left the bad actors to play. And maybe that was their goal, but it's left the whole crypto ecosystem 17 years after Satoshi's white paper, full of kind of rugs and hacks and scams, and people were unable to invest or even punishing, anybody with any coin with actual real utility or value behind it. So now that we've seen the sea change in the White House, and we've seen the entire U.S. administration go from completely anti to completely pro in a day, I believe that people are now going to start in a real way, getting rid of some of those value extraction mechanisms that we call meme coins and AI coins and fart coins and those type of things. And we're going to be seeing people gravitate towards things of value. And RWAs, I think, is one of the real things that's been missing from DeFi and missing from from the world of crypto, because we've been, in a very real sense, we've been shoveling shit from one corner of the room to the other corner of the room with nobody actually creating anything of value. It's just basically taking the money, pushing it over there and pushing it over there, and all the KOLs getting their grubby hands as much money as they can get out of the system. However, with RWAs, we see a completely different story that actually ties the whole world of crypto and DeFi down to earth, so to speak, and that basically puts it into the category of useful and innovative again. And just today, I've had 3 separate meetings with different RWA projects. This is happening, okay? And this is happening very, very quickly as people grasp the concept and get ahead of that next narrative. And John's seeing it in his data. I'm seeing it in my day-to-day. So RWAs, DPINs, these type of infrastructure plays, yeah, I think that's going to be a definite winner over the next term.
You know, one of the questions I keep running into though, when you talk RWA, so we've done a few live streams with some different projects that are working on real estate, let's call it, tokenized properties, multiple owners, tokenized transfer of ownership to other people more easily with less middlemen, all of that. And you've got your like local issues, like you've got your like, government and like legitimately recognizing these things as valid, right? But the other thing that I keep finding really interesting and what's really tough is like when you think about like buying your house, I mean, you might not only buy your house for your lifetime, you might buy it for your kids and your kids' lifetime. It might be a family inheritance kind of a thing, and it is an inheritance thing someday. Like, man, these projects, we're talking these projects are like 2 years old. These are things that need to live on longer than our lifetimes by a lot. And so the thing that I keep wondering is like, wow, this is not just really hard problems to solve, the longevity of these things. Like, is that blockchain still going to exist that thing is on
It has
50
to.
years from now? Yeah,
It
that's
has
where
to,
this,
because remember,
yeah.
especially when it comes to DePIN, which is decentralized physical infrastructure for the ones that were unaware of the subject. This is where we can save ourselves, have a digital infrastructure, even in the case that Amazon and Microsoft and Google don't fare well. So when we talk about, and we didn't mention DePIN, we were focused on RWA, but if you look about the infrastructure of the world, where is the mass concentration of Google, Amazon, Apple, I would argue, with iCloud, and also Microsoft with Azure? That's cloud computing. Everything that we operate in our day-to-day lives, in a digital lives nowadays, is on a cloud somewhere, right? Everything we store, all the videos, all the pictures, all our data, everything, all our digital lives is in a cloud. Now, these four companies that those run those infrastructure, and when you're paying iCloud and when you're paying Amazon AWS to run your company, you're not only paying for the storage and the delivery and the CDN that's delivering that content to your computer, you're also paying for Bezos' yacht, and you're paying for the CEO and the COO and the CTO and the product manager and the developers and the DevOps, and you're paying for a whole overhead of infrastructure that is coming into your 20 or 30 bucks per month on your iCloud or Google Cloud mentioned. Now, if we don't know, historically, businesses don't last forever, right? And even amazing businesses like Coca-Cola, right? They're 50, 70 years, 100 years a company lasted. Eventually, companies are not, this perpetual thing. Companies come and go. And eventually the S&P and the NASDAQ will probably look like there are different top 5 companies somewhere around, like not even in 50 years, but in 10, 20 years. So when those companies shrivel down, we still need to have our digital infrastructure in a permanent, persistent way that is going to outlast not only our lifetime, as John mentioned, but also this company's lifetime. So that is when digital physical infrastructure comes into play. And yes, I agree, it's so nascent, right? It's a couple of years, 2 or 3 years, that these companies are sprouting out. So we are in the speculation phase, but this is not only coming, but this is an essential part of our digital infrastructure, and I do see it taking place.
Yeah, I like the comment here. Put it up again. Everything is getting tokenized, and I think that's exactly what we're seeing with these projects, especially Ondo is one of those ones that John had mentioned. A lot of activity going on over there.
Part of this, it's back to what Jerry was talking about, and I mentioned how Litecoin is boring, and again, I mean no offense to that. Actually, it's a good thing.
Yeah.
But you need some boring in this. If something's going to last for a long time, you need it to be secure. It needs to be up. It needs to be flexible. I get very scared when an RWA project is building on a 13th tier blockchain with no traction.
Exactly, John.
Like when you think about it that way, you go like, it's dead. It's never going to work. Like no one's going to use it. I'm sorry, it's not happening.
John. Listen, there's a project. I don't know if you guys called. Everyone's talking about Ondo because it's kind of the leader in the space. But there's a project called Chintai. Their token is checks. Okay, they started building their RWA back in 2017, and they started building all their project on EOS. I know because I'm the founder of EOS Israel, and that's where they decided to build on. Now they did the hard work that most RWA projects don't do, which is getting their token, their assets tokenized, getting the legislation, getting the regulation part right, like being institutional ready, right? So they did all that work, and now they're just moving their infrastructure to Ethereum, EVM, Solana based, and they're changing their infrastructure. But the hard work that takes years to obtain, which is the licenses, the regulatory clarity. They're in Singapore. They know that every asset that's tokenized on their RWA blockchain, that is going to be like 100% government certified, and it's not just like a Chocomoco. So I think what we're going to discover is that the blockchain that you're building on is a technical aspect. It should be transparent to the end user, and it can be interchangeable. It's like building blocks. It's hard to change. It's hard to move to a new layer one, especially if it's different smart contracts. But everything is nuts and bolts.
Yeah, getting back to what John was saying, that's another reason I've been getting back to proof of work more. And I think, if you are going to be putting these assets on chain, it has to be secure, right? Getting back to Litecoin, it's boring. You can build payroll on Litecoin, right? You can do that on almost any other chain, save Monero maybe, and nobody wants to do that on Monero because the governments would they would all have panic attacks, right? So you can build on Litecoin. You can, MWeb is a real thing. I think there's close to, I want to say like $200 million in MWeb now. So, I mean, there's a lot of money that's all of a sudden going into this channel that's, can be used with, and it's very easy to use it with Cake Wallet if you're interested. I tell people it's not super duper easy unless you have Cake Wallet. But the point being is, if we want to look towards money of the, you have to be able to pay people with it, right? You pay payroll people. Well, what's the only other L1 you could build payroll on? Litecoin. That's why I'm super bullish on Litecoin. And my other thesis, just maybe 3 months ago, was that when we see these big pullbacks in hash power in Bitcoin's network, it's usually because smaller mining ops can't afford their electricity bill, or they got behind some debt, or whatever the case may be. It shut down. And my theory this time going forward was these guys are going to start to switch to script mining. And if you go look at a Litecoin hash rate chart, I was right. There's a lot of these mining ops that aren't closing. They're just shifting their algorithm, the script algorithm, and it's way less energy. And the profitability to Litecoin and Dogecoin is awesome. And then you're shadow mining all these other cryptos, and the profitability is there. And again, this is why proof of work is so important, because that base layer incentivization keeps the network alive. And that's why if you're going to see a network going around for another 100 or 1,000 years, you have to be proof of work.
That's interesting that you don't really hear a lot of Litecoin miners. There isn't like a Mara for Litecoin, right? There isn't a quantum.
They're the same as Dogecoin miners.
It's coming.
Yeah. On that note, let's wrap up here. I want to say thank you very much to everybody for joining, all of our awesome expert panelists, and everybody for watching across 4 different platforms. We're gonna continue bringing this show to more platforms, and anybody who is a Quantum Economics member is welcome to join the panel. We have so many intelligent and amazing brains with us right now. Check out QE.finance. Matt, we got some out music.
We'll just go out with the intro video. How about that? We'll go out with that. Here we go. Thanks.
A lot of people in sort of pop culture thinking that this could be the end.
Yeah, so the dip that you're talking about is actually nothing new for Bitcoin. As far as percentage terms go, if we look at it historically, we've seen these types of pullbacks before.